Welcome back to another episode of Debits and Credits with Haas and Dawe. And today we're going to talk about something that's escrow related, but not escrow related, because it's a law that affects everybody in the state of California. In fact, it affects everybody across the country. It's about unclaimed property laws. The unclaimed property laws are within every state. Every state does it their own way. California has a unique way it does it, and we'll talk about the history of that. And this is where if somebody has money that hasn't been paid attention to, in California, it's more than 3 years. It used to be 7, then it went to 5, and now it's 3 years, and it's pretty standard across the country now at 3 years. Then that money goes to the state of California and for the use by the state. And it's something where it can be unclaimed property, it can be cash, it can be a stock certificate, it can be other types of assets that are held in a safe deposit box. And if no one's paid attention to those assets for more than 3 years, the money's going to go to the state of California. And so the unclaimed property laws in California, it's a two-step process. They have one process is called a notice report, and one process is called a remit report. And what happened? It goes back. We're going talking about 25 years ago, 26 years ago, the very end of the 20th century. Somebody owned stock in Intel, which is obviously a very high valued company in Silicon Valley. And what happened is these stock certificates were sitting in a safe deposit box, and they had been forgotten about, and the person ended up dying. And then there were heirs who, at some point, finally found out about it to find out what happened to the stock certificates, and went to the bank. And the bank said, "Well, we sent it to the state because we didn't hear from anybody." This is called escheatment. It sounds like cheating, but it's not. It says cheating, which is sending the money to the state. And so they got into a lawsuit with California. You cost us all our Intel stock because you didn't tell us about it. So what the settlement with the federal court was that California would now have a two-step process. One was called, so they have a notice report that goes out every November and a remit report that goes out every June. So by November 1st of every year, a company, whether it be an escrow company or whether it be any other business, has to report to the state of California property that has become 3 years old. Now, for escrow companies, it's commonly the unpaid checks on an outstanding checklist, or it's money sitting in an escrow file that have not been disbursed, paid attention to, resolved, check cashed, paid for over 3 years. And so it's just something that now defines what makes that happen. It's called contact. And contact is not the same as a transaction date. Contact means there's been contact. It sounds like I'm begging the question by answering the question using the same word with the third party that's involved here. Contact means verbal, it means written. It means anything that provides communication with this third party. It can be by telephone, it can be by fax, it can be by telegram for those who still send telegrams, it can be by email, it can be by regular mail, it can be by an in-person visit. Anything that allows the escrow company to talk to somebody, communicate with somebody saying, we have an outstanding check of yours that has not been paid. We have money sitting in an escrow file that has not been dispersed. And what is going to be the solution? Can we issue you a new check? We'll stop payment on the check that apparently you lost and send you a new check. Or can you give us an instruction to disperse the funds from the escrow transaction? And it may very well be that there was a hold in escrow for repair work, let's say of $1,000, and everybody forgot all about it. And here we are 3 years later, and it's still sitting in the escrow account. And so what do the parties want to have done with it? And so if the escrow company can have contact with the people, it's not going to go to the state. And it's a 3-year rule. So if there's been no contact for 3 years or longer, the money is eligible to be escheated to the state of California. Now, let's say that there's a file is in dispute where you've got a buyer and a seller, and the buyer put in $1,000 as a deposit on purchasing the property, and then they stopped getting along. And then the seller said, "I want I'm not gonna close this escrow because this buyer isn't performing. Or the buyer's saying, I don't want to buy this property because the seller's not performing under the contract. And so then it gets into dispute of saying, well, the buyer's gonna say, I want my money back. The seller's gonna say, I want my money back. And the buyer's gonna say, refuses to cooperate with the seller, and the seller refuses to cooperate with the buyer. And so you've got a dispute going on. And they go back and forth, and no one can get them to agree. Well, after 3 years, if there's been contact with both, if there's still contact with both parties, what do you want to do with the money? Then it's not subject to escheatment. But if there's been no contact with either party, or if there's been contact only with one of the two parties, the funds are going to get escheated. And so that's where this whole thing of contact is important. And the state has said that within 2.5 years, after, at the 2.5 year mark of no contact and funds being sitting in the file or on the outstanding checklist, the escrow company is required to notify, or at least try to notify, the buyer or seller or the payee of the check that we're still holding your funds, and if we don't hear from you by the end of the 3rd year, that the funds are going to be escheated. Commonly, a lot of us will get notification from our banks that, let's say we have money in a savings account and that we haven't touched the savings account for years because it just earns interest and it's there as a savings account as a reserve, that the bank will send out a letter saying, we haven't heard from you. It's time for escheatment. Please let us know you still want us to keep this account active. And then you'll check a box and send it back to the bank, and everything will continue on as it has been. But that's another way how contact can come into play. Now, let's say there's no contact. You can't get a hold of the people. You can't issue a new check. And so the funds are now subject to the escheating process. So in California, you have the notice report, which they have to be submitted by November 1st every year, and then the remit report, which gets submitted between June 1st and June 15th of the following year. Now, California, it used to be that it would allow companies to do the escheat computation based on the company's fiscal year, whether it be a December, a January, February year end, it didn't matter. That's how it would be based on. But then part of this lawsuit deal that California was put on a fiscal was adopted June 30th as its cutoff point, which makes sense because June 30th is the fiscal year end for the California budget year anyways. So as of June 30th every year, what escrow companies have to look at, and a lot of the companies as well, what outstanding checks does it have? Are there any checks that are outstanding for more than 3 years as of June 30th of that year? And if so, they're subject to escheating. And so what they'll do is they'll fill out what they call a notice report. They put down the person's name, tax ID number, last known address, and then a reference number and a dollar amount. And then it'll do that for every one of the outstanding checks that are over 3 years old. Or if there's funds in a file that are over 3 years old, it'll list the payee's name, not the payee's name, the owner's name, meaning the person in escrow it belongs to, and the date of last contact, and again, the tax ID number. Now, a couple of things to take in mind on this notice report. If the escrow company doesn't have the tax ID number of the person and can't get it, it's okay to leave off. If they don't have the address, it's okay to leave off. It doesn't mean they should do it if they have it, but just in case they don't have it, they're still allowed to submit the notice report, and based on the fact they don't, it's information unknown. And that's what they put down, unknown address, unknown tax identification number, and the state will accept it. And then what'll happen after this notice report is submitted by November 1st of the year, the state then goes on its own mission. It will try and find anybody and everybody who's on that list through their own databases of addresses and ability to find people. When we do our escheat reports for clients, we go off of the information we have as best we can. And then the state will reach out as well. And so this is what's going on with the notice report. And if the state finds the people, they're going to the people will get the letter from the state that says, hi, so and so escrow company has money for you. Please contact them. So now this person who's on the notice report is notified of old funds. they can take their letter and contact the escrow company and give them a copy of the letter that says, "Here I am. I got this letter." Because the escrow company wants to make sure it has the true person, the real identity. And so what happens is then the escrow company can rely on that letter from the state and issue a replacement check to the person or disperse funds from escrow to the person. Now, one thing that's interesting about this whole thing with the state and the notice report, and let's say you have a buyer and seller, and there's no contact with both of them. On the escheat report, both names are going to show. And the way the state deals with it, this is going to sound a little bit bizarre. It's first come, first serve. So between the buyer and the seller, whoever shows up first can make claim to the money that the state has been holding, or to notify you that you can then release it to that person. And that's how the notice report works. Now let's talk about the remit report. The remit report goes out between June 1st and June 15th of the following year. Why do we say between June 1st and June 15th? Because the state gives you 2 weeks to be able to remit the money, to go and get a wire transfer set up to wire the money to the state. So what's going to happen is the escrow company will have gotten a letter from the state saying we've received your notice report. And over the course of from November 1st through the end of May, if the escrow company has been notified that there are people who've been found and have had contact and have been given permission to release the money to, the company will do that, and they'll remove those items from what had been on the notice report. And so what goes in on the remit report are only the remaining names of people who have not come forward. Now, if no one has shown up, then they're going to remit the funds on that entire notice report. And they send in the remit report, which is just a duplicate of the notice report. They send in a new cover page with the remit report, and the state is notified that here's payment. What's going to happen is there's going to be a wire transfer done from the escrow company to the state that matches the amount on the remit report. And then California will file that in their unclaimed property funds, the unclaimed property law section. But if you go to the California State Controller Office's website, because the state controller is the one who handles all the unclaimed property money in California. So if you go to that website and dial in your name, you might find your name pop up. With anybody who's on a remit report and where money's been sent in, that person can call up their name, or if it's a business, call up its business name, and the state will list all the unclaimed property that has been remitted on this behalf. So anything that got paid in to the state will be there, will be visible, will be available to be claimed by the seller or buyer, whoever's on that remit report. And then there's a claim form you fill out. It has to be notarized and so on so you can prove your identity. And the state will send you a check. They'll also send you interest. Now, speaking of interest, let's go back to the notice report and the due date of November 1st. One thing to be careful of. If that report's late, the state can charge interest for late filing. And then in the following June, it can charge interest for late payment. But the state's usually pretty gentle about where it assesses or doesn't assess. But a but to the but is that if they do assess interest, it's 12%. It's a statutory rate. It's in the code, so it's not one that fluctuates with the interest, with the federal discount rate, with the 10-year Treasury rate. Nothing. It is a statutory interest rate, 12% for late filing or late payment. Now, a couple of other requirements is that if the amount that's going to the state is $2,000 or more, it must be done by wire transfer. You cannot write a check for it. If the amount is less than $2,000 and you're talking about some outstanding checks that have gone stale and no one's claimed them and no one's paid them and so on, then the company can just issue a check to the state of California. As long as the amount's less than $2,000. And again, to keep in mind is that it's whatever money the company is going to send in is between June 1st and June 15th. They don't like it before June 1st, and they don't like it after June 15th. And there are times that they've sent money back. Now, here's the moral of the story when it comes to unclaimed property. You don't want to have any. And what you want to do is review your outstanding checklist on a regular basis. We think at least quarterly. And then you want to review your escrow trial balance. Same thing, at least quarterly, to see if there's money sitting in escrow files that can be dispersed. So to see if there's old outstanding checks, you try and track down the payee to make sure that they cash the check. But that's a lot easier than having to deal with having to do an Escheat report, a remit report, a notice report. It's a lot easier just to find the people and get them their money. Plus, it makes them happier too that you've gotten them their money. Now, all the different states in the country, like we talked about, have their own claim property laws, and there are companies out there that will provide a service and will do these cheat filing for you. Uh, if it's something where you're comfortable doing it either on your own, with internally, with an outside, whether it be an accounting firm like us or another outside provider, there are a couple of very good ones in California, other than us. Um, RMA Accounting does it, and ReconWorks does it, and they're both very good at what they do. They're very good people. Um, and so here we are at the end of another episode of Debits and Credits with Haas and Dawe, and everything you wanted to know about the unclaimed property laws.